Hello, welcome to the show. This is day 60 of my day trading journey. So today I did take a trade and I'm gonna go over that in a little bit. So I did learn about mitigation blocks. So basically a mitigation block is basically a low and then a high. It's kind of like a breaker block, but not really because we don't create a lower low like right here, breaking this low right here. We create a higher low instead, and then we create a higher high. So basically this would be the mitigation block. But that's not the only aspect to a mitigation block, pretty much. So, mitigation block could be uh, disrespected fair value gaps, order blocks, breaker blocks. I did take a trade. So, right here, took it on the 5 minute, and it was not a good trade. It could have been, though. As you can see, price went back down. So, I'll take the trade off of this fair value gap right here. So, I took it on the 5 minute. We had this fair value gap right here. And see, they got respected right here. We got some displacement to the downside, but I probably should have waited like at least two more candles before taking that. As you can see right here, price went back up, and I waited. I should have also waited to see like if this fair value gap right here would at least get respected. But as you can see, it didn't. And as you can see right here, this is basically like mitigation block. So we had this fair value gap right here, and then it got retested right here. It got respected two times right here. Price went up, got retested again, and went back up. And it was an opposite fair value gap, pretty much. It was a downside, and this is like taking price back to the upside. So it's a mitigation block. It just makes the market move, even though it's like not supposed to, I guess. I don't know. I still don't understand mitigation blocks 100%, but that's basically what it was. And so right here, price goes up, disrespects this fair value gap. And at this point, I was thinking it was at least going to respect this one and start going back down, but it does not. Once it broke, what is it called? Once it closed above this fair value gap, I did not want to stay in the trade. So what is it called? Bought back right here and it just closed the trade. So a trade that I should have done, because in this trade I did not use what is it called? A liquidity sweep. I probably should have waited for one. As you can see right here, we do get a liquidity sweep. We swept this high right here. So if I waited a little bit and took this trade right here instead, as you can see, we sweep this high right here, and then this fair value gap does not get respected right here. So I would have waited for this one, and then fair value gap, boom, and put the consequent encroachment right here. Because if price closes above this right here, then it's most likely gonna get what is it called? Disrespected, you know. It's not gonna respect the fair value gap, and it's probably just gonna keep going up. Maybe we sweep this high again and continue going back down. And so basically, uh, would it take the trade right here, put the equilibrium, so it's from this to this, what's called higher. So from this high to this low, if I can get it properly, boom. So these bodies, I think it's the wicks, right? And as you see, equilibrium does not get respected right here. It does not get hit, but it doesn't matter. We have what is it called? Break structure to the downside, a fair value gap that gets respected right here. So if I waited two, what is it called? At least one big candle to the downside, as you can see, this candle was very bearish, unlike this one right here. As you can see, it was a doji candle, I guess. Does not have that much liquidity in it. Does not look like it wants to move to the downside, as you can see. It's a very small body and high wicks. Very uh, good sign that price is not going to want to keep going down to the downside. And as you can see, this one was very bearish. Price went down. Uh, would have taken an entry right here. Uh, boom, take an entry off of that. What is it called? Stop loss slightly above this, and then that would not be a good trade at all. But take the trade off of that. Stop loss above this fair value gap right here, and then go for a 1 and 2 trade, like slightly above, and then go for a 1 and 2 trade. Something like this right here, and that would have gone. that would have hit take profit right away. As you see, price reversed back up, swept these relative highs right here, and this could be the next trade idea. So if we get a breakout to the downside, breaking this low right here, then it could be a what is called a possible trade that I might take. But as you see, the time it's very late. It's not going to be very liquid, you know. But that's basically it. Thanks for watching.